All right, let's jump right into this explainer. If you've been around the crypto block a few times, you've absolutely crossed paths with Stellar, or its native token, XLM. It's often seen as the quieter, maybe more diplomatic sibling in the crypto Wild West. It spent a decade just quietly building this massive network for global cross-border payments. But, the market shifts fast. So today, we're putting this battle-tested altcoin under the microscope to see if it still actually holds weight in a 2026 portfolio.
Here's our roadmap for today. We're hitting the origins of a veteran altcoin, evolution and token supply, the 2025 market roller coaster, the bull versus bear case, and finally, the final verdict. Let's get right to it.
Starting off with Section 1, Origins of a Veteran Altcoin, the Quiet Sibling. Let's dig into where this all started because Stellar has some serious pedigree.
So, Stellar didn't just materialize out of thin air. It was co-founded by Joyce Kim and Jed McCaleb. And yeah, if McCaleb sounds familiar, it's because he's a crypto pioneer. He founded MT Gox and actually co-founded Ripple. The really crucial piece of lore here is that he left Ripple over creative differences. He specifically wanted to build a truly decentralized, non-profit-driven network to bank the unbanked. And that mission, it's literally baked right into Stellar's DNA.
Tracing its evolution, the network officially launched back in July of 2014. Now, originally the asset was just called Stellar, but in 2015 they did this pivotal rebrand to Lumens, or XLM, just to cleanly separate the token from the network itself. And then came 2019. We saw a massive token supply burn that totally flipped the project's tokenomics on its head, which we'll actually unpack in just a second.
Moving on to Section 2, Evolution and Token Supply. Building the foundation. Let's take a look under the hood at how the tech and the token supply actually shifted.
To really get XLM, you have to understand how it operates. Unlike Bitcoin, which grinds away using that energy-intensive proof of work, Stellar completely scraps that model. Instead, it uses the Stellar Consensus Protocol, or SCP. This is exactly what makes transactions on the network lightning fast and unbelievably cheap. Which, let's be real, is absolutely essential if your whole goal is moving money efficiently across the globe.
But here's the thing. Stellar is way more than just a simple payment rail now. 2024 was a massive year for tech upgrades. The crown jewel was definitely the full deployment of Sorb and smart contracts. This was a real game changer. It basically transformed Stellar into a modern, active ecosystem, throwing the doors wide open for DeFi and NFTs to live natively on the network.
Now the tokenomics are fascinating. When Stellar first launched, there were 100 billion tokens. But remember that 2019 event I mentioned? The Stellar Development Foundation stepped in and burned roughly half of that entire supply. Just poof, gone. Today, the max supply is permanently capped at 50 billion, with about 33.7 billion circulating. That burn was a drastic, defining move for the asset's scarcity.
But hey, tech and tokenomics are only half the battle, right? The market dictates the rest. So, on to Section 3, the 2025 market roller coaster, testing investor patience.
If 2024 was all about building, 2025 was just a brutal test of endurance. Stellar actually boasts partnerships with absolute titans of traditional finance. We're talking MasterCard, Paxos, Franklin Templeton. But even with those heavyweights backing it, XLM couldn't dodge the broader macroeconomic headwinds. Throughout 2025, the whole crypto market basically cooled off. XLM would occasionally test local highs in the mid-30-cent range, but it ultimately just slid down right alongside the rest of the market.
93 cents. Let that number sink in. That represents a very painful reality for a lot of folks, because that was XLM's all-time high back in 2018. If you bought the absolute top, you're sitting on a really heavy loss right now. It's just a stark reminder of how high this asset once flew and exactly how far it's had to retrace. To give you a quick reality check, as of mid-2026, the asset is down roughly 22% year over year. So despite all those killer upgrades and massive partnerships, long-term holders have just had to sit through a really frustrating, grinding downtrend for the last 12 months. But look, if you're an active trader, there's absolutely still profit to be made here. Take the liquidity sweep from early June 2026. The price cracked that psychological 20-cent support floor, dropping to 18.5 cents. But what happened? Buyers aggressively stepped right back in. We saw a rapid 13% rebound, pushing it back above its 200-day moving average to around 21 cents. So while the macro trend is undeniably tough, those local bottoms are being fiercely defended.
So, where exactly does that leave us today? Let's hit Section 4, the bull versus bear case, weighing the reality. It's time to systematically weigh the risks against the rewards for a 2026 investor.
Let's hash this out. On the bull side, you can't deny the benefits. XLM has massive real-world utility for ultra-cheap remittances. Those Sorabond smart contracts mean it actually has a pulse in DeFi. Exchanges are offering some pretty high-yield staking opportunities. And, crucially, the supply is fixed. Zero network inflation, so you don't have to worry about surprise token dumps. But we have to talk about the bear case. The risks are incredibly valid. You've got fierce competition from Ripple for institutional money, plus all those shiny new Layer 1 blockchains. The price action is notoriously sluggish compared to the hype coins. It is heavily dependent on Bitcoin's mood. And man, hovering around 20 cents, there is a massive, daunting climb back to that 93-cent all-time high.
Which brings us to Section 5, the final verdict, survivor or relic. When you factor in the history, that massive supply burn, the real-world utility, and the exhausting market performance, what's the actual takeaway?
So here's the question you really need to ask yourself. Based on your own unique portfolio strategy, is XLM a smart buy today, or is it just a relic of the past?
The absolute bottom line here, Stellar is not a get-rich-quick token. If you're chasing overnight parabolic pumps, this definitely isn't the coin for you. It's a utility-driven asset built for the long haul. If your portfolio is geared toward lower risk, XLM offers a pretty solid foundation. It's survived multiple bear markets, it's constantly developing, and it has actual real-world adoption. On the flip side, if you have a higher risk appetite, scooping some up near these historic support levels around 20 cents is a really interesting play. But either way, buckle up because you have to be prepared for some serious sideways grinding.
At the end of the day, Stellar's success relies heavily on slow-moving institutional adoption. And since crypto is notoriously volatile, the golden rule applies. Never invest more than you can comfortably afford to lose. So, as traditional finance slowly builds its bridge into the blockchain world, will patience finally pay off for this battle-tested network? Or will the explosive momentum of newer chains just leave it in the dust? It demands a very specific kind of investor. So, are you one of them?
Thank you for watching this video. Please subscribe this channel.